Boom shakalaka, is Bitcoin in trouble? As the price is down over 5% since recent highs a day ago, Bitcoin flash crashed on Binance. Does this spell the end for Bitcoin? Could potentially the Bitcoin futures ETF be doing for Bitcoin the same thing the CME futures did for Bitcoin in predicting the peak of 2017? We're going to take a look at all of this. Stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're taking a look at could Bitcoin be in trouble? Could this spell the beginning of the end for Bitcoin, or are we going to continue heading upwards? Before we get into this, guys, make sure to like, subscribe, click the notification bell. Also come join us over on Twitter at @TheCryptoLove. Also, today's video is sponsored by Revenue Coin, so stay tuned until the end for a sponsored review of the project. Now, Bitcoin today down 5% since yesterday's highs, after having the first futures ETF listed on the New York Stock Exchange, the ProShares Bitcoin Futures ETF. This leads some people to say, is this the beginning of the end? Because if you remember, back on December 17th of 2017, there was the CME futures that debuted, and the headline that day was Bitcoin debuts the world's largest futures exchange and prices fall slightly. Well, they were wrong. It fell more than slightly. It fell almost 90%. Could the same thing be happening now as we have the Bitcoin futures ETF listing and then the price tanking? We're going to take a look at that. Now, if we take a look at where Bitcoin is right now, we can see that, well, there's pretty much this line of the two peaks right here and the line from the two bottoms right here, making somewhat of a wedge that Bitcoin is sitting in. Now, what could happen with that? Well, the price could bounce back and forth between there and then get squeezed upwards, or it could also go downwards, or it could also break upwards, or it could continue in this area right up here, continuing this uptrend. So we're going to take a look at where Bitcoin is likely to go, because that's what we love to do in these exercises. But before we do, let's take a look at some of the news. Well, recently, 15 hours ago, Bitcoin price flash crashed by 87% to $8,000 on Binance. Binance.us, that is, which technically isn't Binance other than the name. But BTC USD crashes 87% on Binance US platform, drawing irritation from traders who criticized order book depth. And Binance went on to criticize the algorithms that traders were using on their platform, saying that that's what caused the crash. Now, if we take a look at the chart right here, you can see something doesn't quite look right. Look at this gigantic wick right there. And CZ goes on to say, well, expect very high volatility in crypto over the next few months. Very high volatility. As a matter of fact, look at this insane volatility on my exchange. But I think the truth comes out, because in case you guys don't know yet the difference between Binance and Binance.us, this guy, Crypto Chase, summarized it. He said, good thing Americans are forced onto these dog shit exchanges where they can get completely scammed on unreasonably thin books. This type of shit just shouldn't be happening. It's not fair that some got stopped out and some stayed in, some get fills and some don't. Now, that's probably the best review I've heard of Binance.us, because if you go and take a look, anybody who's ever used Binance.us knows it's a garbage exchange. Look at this, 213 reviews, 89% are the worst possible review. It's a scam. Don't put your money in. I bought $40 worth and can't get it out. Binance took all my money. It's a total scam. I plan on filing a complaint with the State Attorney General and possibly the SEC and OCC. So, really, this guy's fault right here for selling it to whatever company hosts it shouldn't even be called Binance, but it's basically a mar on all of cryptocurrency. So, this happens. Bitcoin flash crashes 87%. Good on anyone who actually was able to buy it up at $8,000 right there, getting an insane discount on it. But that has caused a bit of fear in the market. Not only that, but we have articles like this, why Bitcoin futures ETF could be a bloody ride. Regulators maintain the futures market is a lower risk way to list Bitcoin, but there's a major catch, what's called Contango, which is basically bleeding out of your investments. So while basically buying these ETFs is safer than buying Bitcoin spot, what happens is that you could be massively missing gains as an investor in the ETF. And this all comes down to the reason called Contango right here, which basically there's a bleeding out of your investment And it's expected that the ETF is to underperform spot investing in Bitcoin by 8.4% annually before fees. So that is huge. Now, that leads you to say, well, he goes on to further say, retail investors should stay away from BITO. But this leads you to think, is this going to cause the same thing that the CME debut caused back in 2017? Did we actually see the peak here? And is the price going to drop precipitously off? Well, I would say there's at least one thing that looks quite different. That would be every indication of the end of a bull cycle. Back here in 2017, guess what? We had a peak right there. Same with the peak in 2013. But right now, we don't have a peak. As a matter of fact, it's not even the highest it's ever been on cbbi.info. So that right there is saying it's not the same. But the FUD doesn't stop there, guys, because there's a Polygon hack, but not really. So thank goodness, wasn't hacked, but Polygon swerved from an $850 million hack on the Ethereum bridge. Turned out that this guy right down here at G3RH4, Gerhard Wagner. Okay, Gerhard Wagner, got it. Gerhard Wagner. He disclosed the bug, and Immunify facilitated the bug bounty of $2 million, giving him that bug bounty for saving $850 million in losses. So, fortunately, Polygon wasn't hacked, but we see FUD across the markets today. What does this actually mean for Bitcoin price? Well, let's delete some of these things, because I have a feeling that we won't be seeing all of that price action just yet. As a matter of fact, until proven otherwise, I would be so bold as to say we will likely see the price, because hey, this area right here, this is pretty much top level. So clearly we bounced up against it. We broke through to a new all-time high, but it just didn't have enough steam. So what likely will happen is that, we may bounce back and forth in this territory down here, but even more likely, I would say we're probably going to end up staying in this same bouncing, and then breakthrough territory to continue in this trend until it actually breaks through the trend to the upside. Because despite the FUD titles today, we have to look at the bigger picture. People can buy Bitcoin at Walmart. The giant retailer allows people to buy Bitcoin at 200 of its Coinstar kiosks. People can buy Bitcoin at Walmart. Not only that, but we see realized price to liveliness chart compares the cost basis. It's a key level for Bitcoin. Basically, what it shows is the liveliness of the blockchain and Bitcoin's price. Well, anytime it's in this red area right up here, great time to sell. So pretty much if you would have caught it back in the top that we had earlier this year, or in 2017 or in 2013, those would be great times to sell. Great times to buy in this green. Well, right now we're pretty much in the middle. Not sell territory, not buy territory, pretty much hodl territory. And as we have ETFs coming to market, Grayscale recently, they've said they filed with the SEC to convert its Bitcoin trust into an ETF. If that were to happen, Willy Woo did the math. He said if Grayscale's Bitcoin ETF was improved and it charged 0.25% fees in line with many gold ETFs, it would have to hold 28% of the Bitcoin circulating supply in order to make the same fees revenue as GBTC does today. So the big difference between Grayscale going to an ETF and the ETF like the ProShares ETF is ProShares ETF is a linked ETF. Grayscale is actually a Bitcoin-backed ETF. That's what they're saying they're going to have. And right now, it holds roughly 3.44% of all the Bitcoin in circulation. Well, go back to this. In order to maintain the same fees, they would need to hold 28% of all the Bitcoin in circulation, which would put a big buy pressure on Bitcoin. They would be buying up a lot of Bitcoin in order to do that, which would lead us likely to a much higher price Bitcoin. Because even on the price models that we have right now, Willy Woo's price models on Woobull.com, the top right now, $191,000. The bottom, pretty much $40,000. So we're much closer to the bottom than we are to the top. So it does look very much like we will be seeing Bitcoin price continuing up, like it's not particularly in trouble. Not just yet. But you know who should be in trouble? This man right here. So that's all for today's episode. But now we have the sponsored review of Revenue Coin. Now, in case you guys want to check it out, I have interviewed the CEO of Revenue Coin previously. You can check that out right up here. But Revenue Coin is the first revenue token in the world. And it should be said, this is not an endorsement of the project. This is a sponsored review. So I'm just presenting the project to you. You do your own due diligence, and then you can invest in the private sale if you are so interested by going to their website, revenuecoin.io. Now, Revenue Coin holders fund high-tech companies to scale. Startups receiving funds allocate up to 10% of revenues to the systematic purchase of RVC from the market, reducing supply and increasing value. And you can go to their homepage and you can buy tokens right there if you are interested in doing so. And they have some news here, but basically in terms of the ecosystem, this is how it works. So it's an ERC20 token, an integral part of the Revenue Capital ecosystem, which supports promising high-tech companies by distributing funds and ensuring asset to a shared customer base. Revenue Coin tokenomics stimulates the growing demand for RVC tokens over time. So basically how it works is the community buys Revenue Coins. The capital then goes to young companies. The companies grow and the revenues increase, and then token purchases from the market reduce the supply of Revenue Coin as those profits are paid back from the companies. Now, this is not a new model. This is something called revenue-based financing, also known as royalty-based financing, a method of raising capital for businesses from investors who receive a percentage of the enterprise's ongoing gross revenues in exchange for the money they invested. And they are taking that model and they're actually applying it to cryptocurrency, allowing you to fund young companies a lot more quickly than the traditional financing model, and then benefit as the companies grow and pay back the ecosystem. Now, here's another picture of how it works. Basically, you invest in RVC, you buy Revenue Coin, and then they select startups that they fund, and 10% of the revenues goes on purchasing Revenue Coins and reducing their supply and burning them, which then goes back to benefit the investors, which would be you if you choose to. There are certain benefits for holders of RVC, so exchangeability, being listed on multiple exchanges, hidden products only available to Revenue Coin holders, voting rights, so which projects they'll be supporting in the future, liquidity, and payment functions as well. And they say Revenue Coin will increase in value because it's a deflationary token. Its quantity is fixed in smart contracts, and RVC supply on the market decreases due to monthly buyback and burning of tokens, which the companies from the Revenue Capital ecosystem are obliged to do by allocating up to 10% of their revenues to this end. In addition, a temporary blocking of RVC held by the team and largest investors protected against sudden price falls. So if we take a look at the token distribution and the fund distribution for Revenue Coin, we can see here that in token distribution, 50% goes to investors, 15% for support for ecosystem projects, 10% to the team, 10% marketing and sales, 5% liquidity, 5% advisory team. And in fund distribution, 80% goes to investments in prospective startups, 80% in operating activities, 5% in marketing, and 5% in liquidity reserve. Now, they have the roadmap down here, and you can see they've already completed some things here, like including Xaria and Skyrocket, and then they have some things coming up, like getting listed on certain exchanges and integration with the real economy, finding other projects to include. And as we can see here, they have a very, very large team. You can scroll through and also see the large number of advisors they have. And like I said, I have previously interviewed Jarek Bialik, the co-CEO or the CEO, and you could check that out by watching the linked video there. But they do currently have 2 projects in their portfolio, Xaria and Skyrocket. Xaria helps navigate through a fascinating world of investment safely using bots and advanced trading tools on Forex, CFD, crypto, and equity exchanges. Skyrocket here is the most advanced trading platform ever made, allowing investors to invest smarter by using professional trading tools. And it would seem like the success of the project would definitely have a lot to do with the companies they end up adding to their portfolio. So guys, that in a nutshell is Revenue Coin. You can check it out at revenuecoin.io or click the link in the pinned comment. You can participate in the private sale at this discounted price until it goes up to the public sale price a little bit higher. You can do that by just going to the website there. Thank you very much for sponsoring the episode. If you guys did enjoy it, make sure to like, subscribe, click the notification bell, and I'll catch you later. Peace.